The Life Insurance Corporation of India is poised to have the biggest IPO so far of 2022 and the biggest IPO in Indian history. The company has been around for more than 60 years and is aiming for a valuation north of $72 billion. In today's video, we are breaking down the bull and the bear case for the equity. We're talking about why the Modi government is interested in privatizing one of these state-run enterprises, and Hannah is getting absolutely torqued in the meme section. Stay with us.
I'm Hannah, this is Aaron, and you're watching the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for more than 26 years. Now, I might be a youngin', but that's longer than I've been alive, folks. They can help you with all of your data storage and cloud management needs. Check them out at jetstore.com. They handle zettabytes of storage. That's pretty nuts.
We've got more big numbers in today's rundown. Not quite as big as zettabytes, but you're going to be impressed by them.
That was almost a smoosh.
What would someone do if they were to be smooshing?
Oh, okay. So a smoosh is where you go exactly like this onto the like button. That sound effect was new. That's not officially a part of the smoosh, but it's on the like button.
The Life Insurance Corporation of India has filed to raise the equivalent of $8 billion US. Billion. That would value the previously state-owned enterprise at a market cap of over 72 billion USD.
Jeez.
Now,
man.
to our viewers out there based in India, we know that this is all going to be priced in Indian rupee, but our audience is more fluent in US dollars. Yes. We did a bunch of the translations here, but just so that you understand, this is a trade, a IPO that's occurring on the Indian Stock Exchange and will be priced so accordingly.
Good to know.
This will, upon completion, smash the previous record for an Indian IPO, which was set just last year by Paytm. That IPO brought in $2.5 billion.
Whoa.
So this will more than double that for a total raise.
Wow, yeah.
This is actually 33% smaller than the original plan. So that $8 billion was actually reduced by 33% over the course of their feeling out for this IPO. You and I, we were talking about prepping for this.
Yeah, I totally remember us talking about that, and I was actually surprised when you just said $8 billion because I remember it being bigger.
When they first tested the market, they thought they could get a market cap of $135 billion. So it would be double the market cap and a larger raise without having to give as much of the company away as a part of that raise.
Gotcha.
But we've seen significant market downturns, market shakiness since the end of last year into early 2022, partially brought on by signals from central bank authorities that interest rates will be going up in the near future over the course of a number of corrections. And that is going to hurt all equities in general. It's going to attract people more into bonds, more into other entities. And the thought here, as this company goes public, is that this is a really, really big watershed benchmarking type of moment. And that's for a couple reasons. Number one, this company, the Life Insurance Corporation of India, is a 66-year-old company. They were founded in 1956 when the then president of the nation brought together more than 245 independent insurance companies and took them from being private to public enterprise. Lasted it all together. LIC, which is the shorthand we use for the rest of this video, controls more than 2/3 of the entire Indian life insurance market.
Damn.
We're going to get into some of the crazy numbies later in this video, but it's important to understand that this is a well-established, well-documented track record of seeing its way through market cycles enormous portfolio, enormous balance sheet type of firm. And so this is not the growth story of the newfangled tech startup. You know, in the US, I think it was almost like 2 years ago now, we did a video on Lemonade, which was this newfangled insurance company. And they saw massive fluctuations with the market because they're a growth story. If you're buying growth, if you're buying the stealing of market share, then you'll give it this sky-high valuation. When people get a little bit more skeptical, a little bit more cynical, that can really hurt a firm that isn't getting its valuation based off of revenues, off of profits, off of established infrastructure and network effects. It's just getting that off of its growth.
Makes sense.
What's going on in India, for those of you outside the market? Narendra Modi's, the current leader of India's government, is focused on accomplishing two things. Number one, they want to divest a number of state-run enterprises. This is, in certain ways, not exactly the same, similar to post the fall of the Soviet Union. All of these businesses, all of these core industries that had been centrally controlled, centrally operated, were being then privatized as a means of not only allowing for foreign direct investment and the ability for capital to come into the economy and start to stimulate growth, but also to just create some dynamism with market forces allowing for innovation and other sorts of growth incentives. In addition to creating that injection of dynamism, they also, via the sale, would be raising this $8 billion, which would help them meet budget shortfalls that the government is currently facing, as many governments were faced with budget shortfalls in the face of the 2020 pandemic. Now, at present, there are specific rules about foreign direct investment for Indian companies. Your conventional private company can be held by up to 74% from foreign institutional investors. So they'll evaluate a company and say, hey, up to 3/4 of your total equity base can be from outside owners. Because you think if it was a restaurant chain, you're not really sacrificing your sovereignty, sacrificing your security if someone were to come in there. Banks in India, state-owned banks, can only be held up to 20% by those same foreign institutional investors because they want that control. That's really where the engine of the economy is located. And up until this point, no one foreign had ever been permitted to own equity in LIC. So this is a watershed moment where you're looking at a business that was strong, that had consistent cash flows, that has been around for more than 5 decades. And you're saying, hey, this could get more valuable just by expanding the pool of potential buyers of the firm's equity. That's what happens when you open it up to this foreign direct investment. So that's potentially going to increase the value of this firm, create some diversification in terms of the holders of the entity, and raise some money for the Modi government. Just to compare, another thing that this will get pointed to, we're not putting this in the comps section for a very specific reason. Saudi Aramco, another IPO that we covered less than 2 years ago, was the Saudi government's attempt to sell a small share of one of their core enterprises, which was the Aramco oil company. They raised more than $29 billion. Two big differences. Number one, just a larger raise. Number two, the Saudi government is able to operate their government properly. They rarely face budget shortfalls because of the amount of profits that are spit off by those oil assets. And so therefore, it was not a necessity in the sense of, man, we're not going to meet our budget demands. Instead, it's, hey, we want to diversify our economy. We don't just want to be oil. So let's sell a little bit of this to invest over here into tourism, finance, other industries.
Gotcha. Wow. Well, I'm absolutely torqued for some Numbies, Aaron.
I got some Numbies for you.
Hell yeah.
I even
crank it up a notch?
I don't know.
Torque further.
Yeah. Crank is 280 million policies in force for the Life Insurance Corporation of India. That is a staggering sum.
That is.
That is more than 50% of the total population of the United States.
Jesus Christ. That's wild.
More than 1.2 million agents out there selling policies, actively getting more policies to be operated.
Wow.
100,000 other employees responsible for underwriting, fulfillment, compliance, what have you. 2,000 branches with 1,500 satellite offices. And another important thing to understand here is life insurance companies, in order to be able to make payouts to the policyholders when they pass away, if just using life insurance as the exclusive example, invest the capital that's coming in as premiums. That's actually part of the reason Berkshire Hathaway, Warren Buffett's company, is so big. He takes in the premiums that all the policyholders pay to Geico and the other insurance holdings that he has, invests that, and is able to invest that without paying taxes on the investment because of the nature of the insurance vehicle. Pays some out, but because that capital is being invested at a rate greater than what the payout has to be, money compounds and the portfolio grows. And they now have a portfolio of over $511 billion worth of assets.
What?
That's what you're investing in.
That's insane. Holy crap. Well, on to the comp section, where we talk about the comparable companies and competitors in the space.
So we're going to put it in 3 buckets relatively quickly. The first thing we're going to point to are just 2 other recent high-flying Indian IPOs. Paytm, which is now at a $7.4 billion market cap, is down 58% since that IPO. So we talked at the beginning about that being a record-setting raise. Great for the company to bring all that capital in, not so great for the investors that participated in the IPO because of their investment basically being cut in half since that point. Similarly, Policy Bazaar, who we covered in a past video on this channel that you can go check out, is down 36% since their IPO and currently sits at a market cap of about $4.5 billion. Now, this has been something of a trend recently for some of these Indian firms, but candidly, we've seen a lot of drawbacks recently in early 2022. Both Coal India and New India Assurance were also previously state-run companies that IPO'd and are down since their IPO. So there is a trend here, and that's why a lot of people are going to be looking here, because they downgraded the initial IPO. So what you're hoping for when you do that is it's now priced in correctly. And if there isn't some sort of fall off the cliff here shortly after the IPO, then that would be a signal of still general optimism about the Indian economy, general optimism about the capacity for these companies to go public, raise some good funding, and be a viable option for investors. And there are firms that have been, specifically like this, very solid investments. 2 of those are enormous life insurers. One of them, an Indian company, HDFC Life Insurance, went public back in 2017, raised $1.3 billion, and is now valued at $15.6 billion. They're up since that IPO. And then there's Allianz, which is the biggest insurer in the world with a $102 billion market cap based out of Germany, and is one of those kind of blue chip, reliable, set it and forget it, add it to your portfolio because of the solidness of their balance sheet. Once, if companies like Allianz, if companies like Life Insurance Corporation of India fall too far, it's the type of company that, after a significant correction across the market, people look to want to jump into relatively quickly because those premiums aren't going anywhere. A couple people might stop paying premiums, but in large, you're not going to see 280 million policies all shut off at once. If you do, that is a much bigger issue than your investment portfolio. You were talking about, getting some weapons and banding together.
Yowza. And on that note, let's move on to the meme factor, where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 is negative memes, 3 is completely neutral, and 5 is all the positive dank memes. I mean, it's life insurance. I can't say that this is going to be the highest meme factor score that I ever give.
I mean, the question is really, is it going to be positive or negative for you?
That is the question. I'm going just a skosh on the positive. I'm giving it a 3.1.
I thought you were torqued for this.
You know what? I bring the thunder to the rundown, but not to the company itself, if that's understandable.
All right. I'm giving it a 3.7. I think that there's a really positive macro story to be told about the Indian economy generally. We're going to get into this in the bull case, but I think that there is still a generalized optimism relative to most other markets within which one could invest. And so I think that in general, that puts a floor under how bad it could potentially go.
Okay.
And in a market where I think a lot of people are looking around and they're looking at crypto, and they're looking at equities, and they're looking at bonds, they're looking at all this stuff, and they're saying, ooh, I don't know about any of this stuff. Security, safety, reliance, the ability to withstand a tough market climate is what investors are going to be looking for. And I'm kind of going on over into the bull case here, but I think that is the kind of security that is actually where the appetite is for the memes.
Totally fair. And before we move on to the bull and the bear case, let's hear about our sponsor, JetStore, one final time. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and
flight simulation.
That's right. For more details, visit jetstore.com. They can help you with all of that and more. On to the bull and the bear case.
You love to be in a position where you know money is coming inbound. There is still capital to be deployed across the economy. If you find a pool where a company is solid, foreign direct investment has not occurred, and the doors are open for that to occur, that is bullish in and of itself.
Right.
Then you look at an economy like India's, and you look at a business model like life insurance, which is basically a proxy for GDP. If the GDP of India grows, people are going to be wealthier, they're going to have more to insure, and they're going to go do that in some capacity. There is certainly penetration, as we talked about in the Policy Bazaar video, for life insurance that has not been realized yet. I don't know if they are optimized to accomplish that via technology in a modern way, but they have the most agents, they have the most offices, they're going to be able to take a part in the growth of the Indian GDP generally, if that is a part of your macro framework for what would occur in the future. And I see that occurring primarily just through the lens of increasing US-China tensions, all sorts of geopolitical instability across the Caucasus and Eastern Europe and all these other areas. India is a pretty darn good place to be, all things considered. And so I think that is a pretty macro bull case for a company like this, in addition to the fact that we've got stable cash flows, we've got consistent long track records of business operation that most of the other companies in the economy just don't have.
Fair enough. What about the bear case?
I think the bear case would have to start with just a different framework than what I have for the Indian economy generally. And in general, there is always going to be waste in a state-run enterprise. So the optimistic take is, okay, with more private operation, they're going to get more efficient, they're going to get more lean, they're going to find ways to optimize. At the same point, you're saying this was in state hands for a very long time. There's going to be excess, waste, inefficiency that holds back potential growth and makes it exposed or at risk from a young, digitally native type of upstart to then kind of gobbled away. I sometimes think about this with the large CPG companies, Procter & Gamble, Johnson & Johnson, that have seen all these little D2C companies pop up and steal market share. They seem like a similar type of setup where it's the big lumbering giant, and they wouldn't have the nimbleness with which to compete with those type of players. And it has been a disruptive past decade. I anticipate it continuing to be a disruptive decade for the incumbents that don't move quickly.
All great points. You heard it here on the Piper Rundown. That's the bull and the bear case. Thank you for watching. We'd like to shout out one of our commenters from a previous video. On our Arena Group IPO video, Mazda Miata Corvette said, "We love Hannah." I love you right back. Feeling the love. It's Valentine's Day. That's so appropriate. Thank you for watching the Rundown, and we'll catch you in the next one.